Good evening, XRP community. Tonight, we're witnessing something that could redefine the crypto landscape. XRP supply on exchanges is collapsing. In the past 24 hours alone, over 149 million XRP tokens, valued at roughly $336 million, have been withdrawn from centralized exchanges. This is not retail activity. Analysts confirm this pattern represents massive institutional accumulation ahead of the next wave of ETF approvals. Let's break it down. Clients of Canary Capital, the issuer of the first spot XRP ETF, have purchased $245 million worth of XRP shares within the first 24 hours. That's direct institutional exposure, $245 million in one day, tied to a relatively small asset manager compared to what's coming next. And the numbers don't stop there. The Canary XRP ETF closed its first full trading day with $59 million in volume, surpassing Solana's debut and ranking among the highest-performing ETF launches of 2025. For a firm with only $200 million in assets under management, these inflows are extraordinary. Now imagine what happens when Franklin Templeton, with over $1.5 trillion in assets, enters the stage. The firm's XRP ETF could be approved any moment, potentially between November 14th and 18th. When that happens, the capital entering XRP could multiply by 10. And that's before even mentioning Grayscale, Bitwise, WisdomTree, and eventually BlackRock, all names already linked to Ripple's enterprise network. Together, they represent tens of trillions of dollars in managed capital waiting for regulatory clearance. This explains why XRP's price has remained surprisingly steady around $2.30, despite all the bullish headlines. The buying hasn't fully hit the market yet, and what's happening now is a structural transformation beneath the surface. Let's look at the data. Charts tracking exchange reserves show a steep decline in available XRP. The blue line, representing total XRP held on centralized exchanges, is in free fall. Liquidity is thinning rapidly, and that means one thing: higher volatility and stronger upward pressure when demand kicks in. Some exchanges are already running dry. BitGet recently reported zero XRP reserves after a surge in withdrawals. That's the first visible sign of a supply shock, the kind that typically precedes parabolic moves. To put it in context, the Canary ETF currently holds around 2.2 million XRP, valued at roughly $5.2 million, and is actively buying more today. Because ETFs operate on T+1 settlement, the fund is now executing its market purchases to match investor demand from the first trading day. This cycle, institutional inflows, market purchases, and locked-up supply, will repeat with each new ETF approval. And with Franklin Templeton potentially joining today, the impact could be exponential. Think about it. If a modest fund like Canary caused $59 million in daily volume, what happens when a trillion-dollar asset manager enters the same market? The scale of XRP accumulation could overwhelm exchange liquidity in days. This is how institutional adoption unfolds, quietly, mechanically, and inevitably. The ETFs are not just financial products. They're vacuuming liquidity from the open market into long-term custodial holdings. In simple terms, $245 million in XRP ETF inflows in 24 hours, $336 million in XRP withdrawn from exchanges, $59 million in day one trading volume, breaking records, Franklin Templeton and Grayscale ready to follow, BlackRock expected to enter next. The XRP supply crunch is no longer a theory. It's happening right now. Exchange reserves are falling. Institutional buying is accelerating. And the biggest players in global finance are positioning for what could become the largest liquidity migration in crypto history. The message is clear. XRP is running out, and the real surge hasn't even started yet.